Hello everyone, welcome back. I got some really good ones for you today on this Sunday, September 17th, 2023. A lot's been going on with the markets and the economy, so that's what we're going to be focusing on for this video. What's up? Welcome back. Glad we could hang out together. I've been well, hope the same for you. And let's dive right into these markets and economy, shall we? First, we're actually going to start with the economy. Normally we start with the bond market, but we will get to that. So we'll get into markets, but let's start with the US has just reached a 17.1 trillion in household debt, a record 12 trillion in mortgages, a record 1.6 trillion in auto loans, 1.6 trillion in student loans, 1 trillion in credit card debt. Average house payment is now $3,000 per month. Oil is up 40% in only 3 months. Mortgage rates are now at 7.5%, with credit card rates at a record too of about 25%, which is such a predatory rate, guys. You borrow $100 and then you have to pay back 125. My gosh, that is so predatory. Keep in the back of your mind that billionaires can borrow from these banks and institutions tens and tens of billions of dollars at a very low interest rate, call it like 4 or 5%, and then they buy their own stock with it, like in the case of Meta and their $40 billion worth of share buybacks last year. So then the stock goes up 100% and they just keep the spread and keep doubling up. So as you know, the typical consumer pays a predatory rate on credit debt, call it like 25, 27%. Their competition are these billionaires that are borrowing at 4 or 5% and then using it to buy more real estate or buy more of their own stock. So crazy, guys. Interest rates, we talk a lot about interest rates on this channel. They're getting to a point now where your average person or average small business is just unable to access these lines of credit at a time when the currency is also, in terms of inflation, getting beaten up really good. So somehow the powers that be have managed to destroy the currency and make getting a loan impossible. You know, normally when they're destroying the currency, the interest rates are really low, and that's what's destroying the currency, all this cheap borrowing. But in this environment, it's really hard to even get dollars, and then if you can get the dollars, you pay a high rate, and then the dollars are worth next to nothing, you know. So crazy, guys. You know, when I started with this 17.1 trillion in household debt, hello Mr. or Mrs. Bird, how are we doing today? That bird was noisy. I hope you hang out. I kind of like the birds, they're pretty awesome. But anyway, when we talk about this 7.1 trillion in household debt, or 1.6 trillion in auto loans, or 1 trillion in credit card debt, guys, that's dollar weakness stokes inflation and then pushes markets higher. Now we do see the 10-year yield right now about 4.3%, meaning, you know, with this issuance of most recent bonds, you could get a very favorable yield, and that renders all the bonds bought up into this point at much lower yields worth a lot less money. So even with this rising yields and rising interest rates and rising dollar kind of environment, and then a fundamental backdrop where the Fed's trying to raise interest rates even more, even in spite of all of that, we still have a ton of inflation. The latest bout of inflation data came in a little on the hot side, especially driven by energy. Guys, look at crude right now, over $90 a barrel WTI. 6,000 products you use every day are petroleum, crude oil derivatives. So, you know, that just plays into core inflation, food and energy. And you can't strip out food and energy from your inflation basket because it makes your consumer price index not accurate. And that's exactly what the government's trying to do. They're like trying to ignore inflation in groceries and oil. You know, it is interesting though, regarding inflation in groceries. We see now Justin Trudeau attempting to set price controls. He's just rounded up all the major grocers in Canada over the last week or so and told them, look, you either charge a lot less for your groceries or I'm going to slap you with a tax. So either way, you're going to pay. That's crazy to me that Justin Trudeau, who has engineered tons of inflation in Canada. I mean, look at median home prices in Canada right now. It'll knock your socks off if you look at median home prices in Canada versus income right now. I would go ahead and Google that, pull that up. You'll be like, whoa. So he's engineering all this inflation in Canada through his administrations. And then when energy and food prices start to go up, he tries to tamp those back down by going to the producers and being like, hey, it's the grocer's fault we have inflation. You better charge less, which just destroys the margins of that grocer, the grocery company. It just basically, Trudeau is destroying their margins. And then if they don't play along with that, threatening to hit them with more taxes. Guys, that is out of control, in my opinion. So we haven't started to see... No, I was about to say we haven't seen that level of price control in the United States yet, but they just do it with a couple more degrees of separation, right? I mean, look at government spending as a percent of GDP and the deficit spending. Oh my gosh, if you stripped out deficit spending in the United States, we'd be at a negative GDP for the last 12 months. So really, we're printing our GDP, and you see it's stoking inflation and driving up these debt bubbles, which you might be thinking there's no way this is sustainable. Nothing is sustainable. What do bubbles do? They double, then burst. So just keep that in the back of your mind, because the dollar's getting beaten up, and we're at a point now where the Fed is almost done with their interest rate hikes. That means they're going to hold rates steady or cut them, which is going to be pretty inflationary. So it's, have you noticed that what's good for the economy is good for the stock market, and what's bad for the economy is good for the stock market? The stock market and growth assets have a very, and even the more conservative assets like real estate have a very heads I win, tails you lose mentality. Like, I feel horrible for these bears that are like, I just want everything to correct and crash and go back to normal and have inflation come down. Yeah, well, you can have your own opinion, and I hope I'm wrong, but I'm staring into my hazy crystal ball, and I think crude oil is about to be over $100 a barrel, which is, just going to stoke inflation that much more. Average house payments right now, $3,000 a month. But, I don't see a crash in real estate coming, because all these people that have locked in lower mortgage rates, they're not going anywhere. And there's just not a lot of supply, and there's still a lot of demand for housing, residential anyway. There is an elephant in the room regarding commercial real estate. It's like, well, I'm waiting for that to crash. Well, I think in real terms, it wants to, because we don't need all this commercial real estate at these bubble prices. But all the things we've just discussed in this video are kind of pushing back against that. So even if foot traffic in commercial real estate areas that are usually doing really well, even if foot traffic's down 40%, maybe terminally, that's still not going to equate to a 40% drawdown in the price, because there's just too much fake money in the system right now. And let's say commercial real estate were to implode, the Fed would just drop interest rates and begin to prop it back up, in my opinion. They won't let systemic fragilities and risks just appear out of nowhere and then the Fed will do nothing about it. Of course the Fed will do something about it. They love a good crisis, as we've discussed. So markets right now, we have the 10-year yield, as we discussed, hanging out around 4.3%. Mortgage rates, kind of up there in the danger zone. Mortgage demand is a lot lower when mortgage rates are at like 7.5%. But again, there's so much stimulus in the system and just not a lot of real growth. It's hard to bring a whole lot of supply of new homes onto the market in this environment. So even though mortgage rates are kind of in the danger zone, real estate price tags are just kind of, shrugging that off. We do have the Fed meeting on Wednesday of this coming week, and so I think they're going to just go ahead and keep interest rates steady like the market's kind of predicting, and maybe one more paltry 25 basis point hike in November. So I don't think this meeting is going to be very eventful. The Fed's just going to kind of repeat what they did at Jackson Hole and I don't really expect a whole lot of craziness out of this coming Wednesday, even though it is a Fed day. But if for fun, you can watch those algorithms kick in when Jerome begins to give his speech on Wednesday. You'll see the market start to as it kind of, bakes in new expectations and adjusts its expectations. Side note though, I generally don't advise trading Fed days because the algos are going full speed, the high frequency traders, and up is down and down is up. So you'll dump, then it'll trick you to go short, and then it'll face rip, or it'll face rip, trick you to go long, and then dump. It's very up is down, down is up, and it often takes 72, 96 hours for the market to digest a Fed rate decision. But I think ultimately the Fed's just going to stand pat. Now, they should raise, but they're not going to. So there you go. Maybe they will, but I don't think they will. And why do I say they should raise interest rates on Wednesday? To get inflation under control. Look what energy's doing, So it's going to be very interesting over the next 6 months to a year too with this inflation discussion, because we're heading into an election cycle. Sorry about this plane that's flying overhead. Let's talk about the plane for a second. Boeing won World War II, okay? The United States didn't, Boeing did. They gave them unlimited budgets for skunk works, research and design. They've probably recovered alien crafts and back engineered them and already patented them. So if you want to look at a good 50-year hodl, not a buy or sell recommendation, but you could consider Boeing. It is a cornerstone of the military-industrial complex, though. Boeing, Lockheed Martin, Raytheon. Who else? Those are like the main three, I would say, is Boeing, Raytheon, and Lockheed Martin. Those are cornerstones of the military-industrial complex. So don't get it twisted. You are investing in war, and I'm a little leery at, I try not to get too ethical when it comes to the investing side of things, but I can't help it. So no, I don't know. Boeing might be okay for a portfolio in my opinion, but I hate to come out here and tell you guys, since World War III is coming, you might want to buy a bunch of Raytheon. You know what I mean? That's just so dirty to me. But anyway, plane's gone, so we can dive back into things. So, we should raise interest rates, but I don't think we're going to. The Fed should raise like 1% at the next meeting, especially with crude moving higher, but I don't think they're going to. So keep an eye on Wednesday. It should be interesting. We did see the VIX up on Friday. The market's kind of coughed up a little bit, the three major stock indices. But guys, they've been very resilient over the summer and now going into fall. So this whole the markets are correcting. It's yeah, they're giving back some of their insane gains. So, whatever. And this is in the face of that higher 10-year yield too. That's kind of crazy that the 10-year yield can hang out around 4.3%. In the stock market. Yeah, it gives some back, but it still remains this elevated. Pretty crazy, guys. So the VIX was up. The fear gauge on Friday popped up a little bit. That's that ratio of calls to puts in the market. When traders are buying puts, they're betting against the market. When they're buying calls, they're betting on the market. When more traders begin to buy puts, that ratio of calls to puts is what sends the VIX, the fear gauge, higher. Side note though, I would never recommend trading any sort of VIX vehicles. I'm pretty sure you cannot trade the VIX directly, but there are vehicles and derivatives of it. I don't recommend those though. Metals kind of came under some pressure, but nothing crazy. Gold hanging out at 1937 an ounce. Silver hanging out around 23. That's so low to me, but gold is clearly the chosen one, and it's institutions that are buying all this gold. It's just lowly retailers that stack silver, and maybe lack of institutional interest in silver is a real headwind for silver's price. Crypto winter continues to drag on. Bitcoin, though, holding that $25,000 area. Really interesting when Bitcoin traded down to 24,900. A bunch of traders on YouTube were like, oh, that's called a death cross. Now the price is going to collapse, and the death cross was the buy signal. In TA and technical analysis, you might have death crosses or golden crosses, and I've always noticed that in TA, whenever you have a death cross, that's actually a buy signal, and when you have a golden cross, you should short. So that's so funny how it's backwards. That's so TA to me. But anyway, moving on. So crypto winter continues to drag on, especially for those alts, but I do remain tentatively bullish. Some of the multi-billion-dollar altcoin networks, as I remain tentatively bullish Bitcoin. I really like Bitcoin, Ethereum, and some of these other altcoins. You got like Chainlink or Uniswap. Not a buy or sell recommendation though, guys. And I'm liking mega cap energy stocks. So like, Exxon, Chevron, Halliburton, whatever, BP, whatever. Just look at the big guys, okay? Look at the multi-billion-dollar market cap energy stocks, or don't. And then physical precious metals, I still really like for stacking. Not, just for the long term, nothing crazy. A little bit of that if you're into it. If not, whatever. And I like high growth tech. So Amazon, Google, Oracle, NVIDIA. Yeah, some of those mega cap high growth tech stocks could be worth looking at. Amazon's vision is to sell everything to everyone. Pretty impressive. You can also look at some of like Honeywell, So that's kind of like a tech stock. Disney. So you could look at Disney right now down in the gutter at about 85. You might be thinking, no, Disney's like losing a culture war and their movies are horrible. But honestly, guys, Disney is like a nuclear superpower. Okay, you can look that up. They print their own money. You can look that up. The Disney dollar, and the Fed doesn't care. Disney. What I'm getting at is Disney is first and foremost a tech company, and a monolithic one at that. So I think Disney could actually be a good value here at 85 a share, but not a buy or sell recommendation, guys. But I mean, last time it was 85 was like 2013, so it's lost a decade in share price already for being so mega cap, But again, could be wrong, so you got to do your own due diligence. Nothing I ever say you should act on one way or another. Let's keep it real. This is just kind of how I'm framing things, what I'm seeing, and then you can kind of take it or leave it, right? Build your own framework, And if you don't agree, please, guys, drop a comment. I totally encourage civil discourse and disobedience. Disobedience sometimes, but civil discourse and civil discussion, I think, is ultimately how we get better. So, if I'm saying things and you're like, man, you're off base or whatever, hey, let's air it out, all right? That's how we get better. And that's really all I got for you guys for right now. You're hearing a lot right now. I'll leave you off on this and then we'll wrap it up. You're hearing a lot right now about a soft landing. Okay, I would just like to caveat that soft landing, parentheses, for rich people stuff. So that's what we're getting from markets, a soft landing or a no landing, meaning asset prices remain inflated. We're not going to have a recession in the financial sector. We'll just have a recession for everyone making $20 an hour forever. So really, guys, the way we're going to get out of this, because I know it's like, man, that was pretty heavy stuff for you to be bubbly about it. But, if you don't laugh, you cry, right? And if we don't talk about how to fix the problem, well, then we're kind of messing up. So wage growth, guys, that's how we get out of this. You need to get a pay raise, okay? And if these small businesses need to stop pretending like 3% per year pay increases or 6% per year pay increases is going to cut it, and the government needs to stop pretending like increasing Social Security payments for retirees like 3 or 4% is cutting it. It's not, guys. Inflation is a little bit too high for that, and it's time for us to just call it what it is and really inflate our way out of it. Or the opposite way, and a lot of gold bugs would tell me to go this route, austerity measures, okay? So cut this government spending, cut these deficits, balance the budget, get the currency under control and stabilize. Do that through interest rate hikes above the inflation rate. Increase capital reserve requirements for large institutions, basically make them hold 10% cash, because right now it's at 0. So make them hold some amount of cash, and you could really help the dollar out. And then also flood the world with cheap available energy if you want low core inflation and growth. So, that's, to me, what we would have to do. And it doesn't have to be oil, okay? I'm not out here to just be like, yes, destroy the planet. Even though I'm not flying the plane, and the people that flew over my house while we were doing this video, they're the ones releasing a month's worth of your carbon footprint on takeoff, you know what I mean? So really, it's the annoying planes you hear overhead in the video that are destroying the environment. But anyway, create a free energy machine, okay? I don't care. Spin the turbine somehow. If you dig a hole like 3 miles down, it's like pretty much as hot as the surface of the sun. So dig a hole 3 miles down, pour a bunch of water in it. It'll create steam, spin a turbine, there you go. It doesn't have to be oil. I'm not going to be all oil about it and dirty about my energy. Although without oil, your standard of living would implode. Especially Americans, man. We drive everywhere. We're insane consumers. But anyway, the World Economic Forum is trying to change that, and we'll see. You know, it's funny. Klaus Schwab came out the other day, and he's like, "There is a movement to resist the elites." It's like, where have you been, bro? Yeah, no one seems to like you. You know what I mean? Klaus Schwab, that like wax figure. But anyway, I don't have anything against him, so please, you know, I didn't. If I go missing, you know what I mean? I would never kill myself, okay? But, you know, screw the World Economic Forum. They're finally starting to wake up, so whatever, guys. So that's really all I got for right now. And, oh yeah, Mark, one more thing, and then I'm gonna let you go. Mark Cuban had 870,000 drained from one of his MetaMask wallets, so it was a phishing attack. I don't think that it was just hacked, like his wallet was chilling and then got hacked. I think he clicked a link or did something he shouldn't have done, and someone came in and drained it. So watch out for scams, guys. And no joke, I've even noticed some scams on Coinbase. So like one time I got this free NFT and it was like, click on this link to claim your 5 ETH voucher. No, dude, that was like a scam, and that was on Coinbase, which is normally a very good custodian of assets and like the best custodial wallet a US customer could get. And so even that, I was like, dang, it's the Wild West out here still. But anyway, we're gonna carry on, all right? That's really all I got for you for right now. I hope this video finds you doing well. I hope you got something out of this. Thanks for hanging out with me, and we're just gonna keep going, all right? Till next time.